Hello and welcome to this edition of the Monday, January 12th Bourdieu Report. At the start of this year, the economic cycle remains favorable. This is what leading indicators continue to show, even if it is more true in the services sector than in the industrial sector. And the US Central Bank is expected to continue lowering its interest rates. From this perspective, the statistics published last week in the United States should support these expectations of rate cuts in 2026. You can see that the job market is clearly slowing down overall, with only 50,000 jobs created in December, which is below expectations, and that an average of 22,000 jobs have been lost per month over the past 3 months. And the trend in temporary employment on the right is not pointing in the right direction. We started the year with reasonably pro-risk asset allocations and an overweight position in gold, which has proven to be correct so far. Over the past week, gold has rebounded by more than 4%, and stocks are up by 1 to 2% and have risen by 2 to 3% overall since the beginning of the year. Many indices are actually at all-time highs, including the American S&P 500, which is not being driven by the tech sector. We are seeing a broadening to other sectors as contributors to performance, notably the commodities sector, on which we have a positive outlook. In the short term, in our view, this momentum should continue unless the current geopolitical turmoil and the Trump administration's attacks on Fed Chairman Jerome Powell dampen investors' appetite for risk. We can clearly see that Donald Trump is explicitly campaigning for the midterm elections. This is reflected in several announcements in favor of consumers who are also voters. This includes measures related to taxation, capping interest rates on credit card debt, and even using the cash reserves of government agencies Freddie Mac and Fannie Mae to manipulate long-term mortgage rates, thereby reducing borrowers' costs. On the investment side, the Swiss hearing aid specialist Sonova has made its way back into our portfolios in mid-December. After underperforming the European healthcare sector by 30% over 2 years, the outlook is improving. And the strategy presented to investors at the end of 2025 allows us to anticipate significant and sustained growth through 2030. That's all for today. Thank you for your attention. Once again, we wish you a very happy 2026 and look forward to seeing you next week.